In this lesson, we're going to explore one of the most widely used technical indicators in trading, the Moving Average Convergence Divergence, or MACD. MACD is a powerful tool that helps traders identify changes in the strength, direction, momentum, and duration of a trend. Let's dive in and see how MACD works. So, what exactly is MACD? The Moving Average Convergence Divergence is a trend-following momentum indicator that shows the relationship between two moving averages of an asset's price. It's used to spot changes in the strength, direction, and momentum of a trend. MACD consists of three main components. 1. The MACD line. This is calculated by subtracting the 26-period exponential moving average, EMA, from the 12-period EMA. 2. The signal line. This is a 9-period EMA of the MACD line and acts as a trigger for buy or sell signals. 3. The histogram. This represents the difference between the MACD line and the signal line. It helps visualize the momentum of the price movement. Here's an example of how these components work together on a chart. The MACD line is the blue line, the signal line is the red line, and the histogram is represented by the bars. For instance, a bullish crossover is when the MACD line crosses above the signal line. It's called a bullish crossover, which is often seen as a buy signal. This suggests that the asset's price is gaining upward momentum. Next, there is the bearish crossover. When the MACD line crosses below the signal line, it's called a bearish crossover, which is often seen as a sell signal. This indicates that the asset's price might be losing momentum. Next, there's the histogram analysis. The histogram provides a visual representation of the difference between the MACD line and the signal line. When the histogram is above the zero line and increasing, it indicates increasing bullish momentum. When it's below the zero line and decreasing, it shows increasing bearish momentum. If you want to see MACD in action for yourself, then sign up for a free trading account on Kraken and get access to this and hundreds more popular trading indicators. Now that you understand how MACD works, let's talk about how you can apply it in your trading strategy. First, look for crossovers. Monitor the MACD line and signal line for crossovers to identify potential buy or sell opportunities. Second, use it in conjunction with other indicators. MACD is powerful, but it's even more effective when used alongside other indicators like RSI or moving averages to confirm signals. Lastly, analyze the histogram. Pay close attention to the histogram for additional insights into the strength of a trend. Increasing histogram bars above zero suggest strengthening bullish momentum, while decreasing bars below zero indicate strengthening bearish momentum. To sum up, MACD is a versatile and powerful indicator that can help you identify potential trends and trading opportunities. By understanding how to interpret MACD signals, you can make more informed trading decisions and improve your overall strategy. Thank you for joining me today. Keep practicing and don't hesitate to revisit this lesson if you need to. See you in the next one, where we'll continue to build on what you've learned.